Welcome back, traders. I'm inspired to welcome you to another edition of my weekly price action based technical analysis series. In today's video, we shall be delving deep into an insightful analysis of the USDJPY chart, providing you with valuable insight through a comprehensive price action based perspective. In less than 10 minutes, we shall explore the current market structures using simple but powerful setups to uncover ideas that can potentially shape our trading decision for the upcoming week. Relying on the power of trend lines, key levels, and chart patterns, we shall gain valuable insight into the historical price movement of the USDJPY market using a top down analysis system. For those who have been with me on this profitable journey on the USDJPY, you would recall that we scooped in over 1,000 pips in profit from multiple entries throughout the course of last week's trading session as we sold the dollar against the yen. Before we dive into the technical intricacies of the upcoming week, let's take a couple of minutes to reflect on the key moments that influenced our decision in the previous week. Now, talking about last week's trading session, the week started with a very indecisive phase when we saw how price action was trapped within that range, which is between the 143.00 level and, of course, our key level at the 142.00 area. And you know how we do it in this community. As soon as price action is trapped within a flat range like this, we all want to exercise some level of patience, waiting for price action to either break out of the resistance line for an opportunity to buy or the breakdown of the support line for an opportunity to sell. And with our orders placed at both ends, we finally saw our first position for the week triggered as soon as price action broke down the support line. And since this moment, we have been selling the USD JPY. As you can see, throughout the course of last week, we consistently sold identified descending trend line, which we actually used to guide our trading activities all the way to the downside. Capitalizing on this, we added more position to maximize the potential of that move, hereby leading into a situation where we scooped in over 1,300 and 300 pips in profit before we begin to see some buy pressure resumed in the market. So, for those who would like to review these commentaries for educational purposes, you will find the link to this commentary right in the description box of this current video. And if you are watching this from my YouTube channel, you will definitely see the link at the top right hand side of your screen. So, with that being said, here let's dive right into the business for today. And we are going to be starting from the daily time frame where I was able to identify a simple structure here that will give us an idea of where price action is likely going to be going for the coming week. Now, looking at the daily time frame here, the first thing you will observe is how price action has been very, very bullish since the beginning of this year. And to that effect, I have a couple of trend lines here, which I have used connecting the series of lower highs, identified a couple of trend lines here, which of course has been supporting the continued bullish momentum in this market. Now, in addition to the trend lines here is a very important key level here, which I located at the 137.500 area. As you can see, this level here has been a major determinant of price action since the month of March. Now, look at what happened here in the month of March. We saw how that level was a very strong selling niche, pushing price to the downside. We saw attempt by the buyers to break out of the structure here again in the month of May, but was negated by selling pressure again from that same level. Now, what happened during the mid month of May was quite interesting as we saw the breakout of that structure. And since then, price action has been trading above that 137.500 area to emphasize the strength of the buyers in this particular market. Now, fast forward 2 months after, price action is back into that 137.500 area, and it's not only back at that level, but we also observed the appearance of buy pressure resume around that area on the last trading day of last week to give us a sign that we are at a critical point in the market right now. And one more interesting thing about this level is the fact that it also shares a confluence with an ascending trend line that we identified earlier. Now, the question going into the new week is, will price action respect the ascending trend line one more time to incite another wave of bullish momentum? Or are we going to be seeing a situation where price will break down both the trend line and the 137.500 level to incite a bearish move to the downside? And in order to answer this question, we would want to scale down into a much more lower time frame. Now, I was able to scale down into the 4 hours time frame where I was able to see things a little bit more clearly. And when I scaled down into the 4 hours time frame, this was what I was able to see here. I saw a sharp rejection of the 137.500, followed by continued buy pressure around this area to give me a sign that we might likely be seeing a reversal pattern at this point in time. And considering the fact that price is still sitting above a very strong ascending trend line, the idea of buying becomes very, very prominent. Now, to gain a better perspective into what is really going on within this structure here, I decided to scale further down into the 1 hour time frame where things became a little bit more interesting. So right here on the 1 hour time frame, you will begin to see things more clearly. And in fact, I was able to identify a reversal pattern, which I think we are going to be using to guide a potential reversal move to the upside. And if you look at the structure here, after considering the impulsive move that brought price back into the 137.500 area, you will see that we have price action gradually transitioning into a reversal pattern in the form of an inverse head and shoulder pattern. And you know how we do it whenever we identify this kind of potential reversal move. The next thing we want to be doing is to identify the neckline, which of course we are going to be using to validate the potency of this reversal pattern. And interestingly, we have a neckline situated at a psychological level at the 138.800 level, which we of course need to see a breakout of this level to hereby validate the potency of this reversal pattern. And in that regard, this neckline here will be serving as our key level for the week. Now, you know how we use our key level in this community. As long as price remains above the key level, we of course want to be looking out for patterns and structures that will support the idea of buying the USDJPY. And if price action continues to trade below the key level, then we want to be looking out for patterns and structures that will support the idea of selling. But with a potential reversal pattern forming here, I want to hold on to the idea that buyers might likely be taking over this market next week, which might be a form of profit taking activities, as those who have bought the Japanese yen throughout last week will definitely want to be doing some profit taking activity, which of course will reflect on the chart as a retracement of the bearish impulse leg that we witnessed last week. So these are my views here on the USD JPY for the coming week. But before I pause the video here, I would like us to take a quick look at the economic calendar to see what majority in the market will be looking forward to. As you all know, that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And right here on the economic calendar, we only have an high impact event coming from the US economic docket on Tuesday, July 18th, and that is the retail sales, which, of course, is an indicator which shows the consumer spending in the United Kingdom, another very impactful event that everyone in the market will be looking forward to. So it's on this note I will want to pause the video here and hoping to see you at the beginning of the week after monitoring our participant in the market will be reacting to the structure, and of course I will be with you in the comment section to give you an update on how we are going to be positioning ourselves ahead of that big move. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.